So the market recently has been going crazy, and a lot of people are thinking that is this a bubble that's about to burst and we're all going to lose all our money and there's going to be like a big market crash and an economic crisis or whatever. So what should you do as an investor? Should you keep buying? Should you just hold your positions as they are? Should you start taking profits? Should you just completely get out of the stock market? This is what we will discuss in this video. So recently some news came out about the Fed and the interest rates, and I don't even remember exactly what it was. Either that they're gonna cut the rates or I don't know, I forgot what it was, but the fact is that I don't actually care that much because I have just started to take this approach of just continuously buying regardless of the news or the sentiment or whatever is going on. Nothing in this video is financial advice, it's for entertainment purposes only. So I've tried many times before to time the market, and when I feel like it's gonna crash, I would maybe sell some positions and then plan to like go back in when it goes down, and it would pretty much never ever work. And I've realized from my own experience that just holding on and just continuously buying the dips, buying as things even go up progressively in intervals, just keep buying, just seems to work best. Apart from that, I also think that like if you were to sell your whole portfolio and everything because you were scared of like a market crash or whatever, you're gonna have like this bunch of cash and you're gonna be very tempted to like spend it and buy like unnecessary things. The way I see it is that I would only wanna like take money out of my stock portfolio if I have a better asset to buy. So what can sometimes work is if you, for example, find another asset class, like you want to buy like a watch or a painting or some classic car or a piece of real estate or anything like that that is also an asset, and you feel like it could give you higher returns than your stock investment, or like how some people move to bonds, which I don't do, but people do that, it's an option, then that is a valid reason to take money out of the stock market. And apart from that, if you're worried about America collapsing or like a world war breaking out or something, if any of these things happen, like you would have a lot bigger problems to worry about than your stock portfolio. Because if like America was to collapse or there was to be a war or the dollar started to crumble or something like that, your money is not going to be worth much, whether it's in your stock portfolio or in your bank account or hidden in your mattress or anything like that. That's why some people, when they are anticipating a war, they might move on to things like real estate or solid gold, like gold bullion, which that's not a bad idea. Like real estate, definitely amazing, and solid physical gold bullion is also great, but you have to remember that real estate and gold bullion is not very liquid, and at least real estate you can still like rent it out, you can make an income from it, you can use it, you can live in it, you can use it as Airbnb, whatever. But gold bullion is kind of useless, like it's just there, like, you know, what are you gonna do with it? I personally prefer real estate over stocks. Gold bullion, not so much. It's just a bit like, it's illiquid, it's just, you know, and it also could go up or down or whatever. But either way, the point is that I wouldn't take money out of stocks unless I'm buying a better asset. So, but if you're just gonna be selling stocks just to take cash out and wait for the market to crash to buy more, that could sometimes work if you're lucky, but most of the time it doesn't seem to work. However, it's okay to keep a percentage of your like net worth in cash, like maybe 5-10%, in anticipation of any opportunities, whether it's big dips or market crashes in the stock market, or if it's looking out for good deals on real estate or cars or watches or anything like that. That's fine. I'm just advising against, well, not advising, I'm just not recommending panic selling. And the biggest example for that is COVID. Like when the market crashed and people panic sold or got stop lossed out, they just basically missed out on like an opportunity where they could just add more onto their positions and get huge returns very quickly. Because when markets crash very steeply, they do tend to go back up very steeply and quickly as well. Yes, there are some crashes that were so horrendous that it took like years for it to recover, but even then it does recover eventually. So unless you have a better asset to buy, I would just keep buying stocks consistently. And that's all for this video. Just a short quick video for the people who are worried about the stock market collapsing or a war breaking out or something like that. And statistically it's been shown that just consistently buying through the highs and lows and crashes and calamities and everything, just constantly just buying through everything, just tends to be the best way. And you can do that with an index fund or with your own stock picking, and I personally prefer picking my own stocks, but you could also do that with an index fund or whatever. Don't forget to like and subscribe and comment. Let me know if you want me to do a video about something specific or feedback you have for my channel. I'm trying to grow it right now. That's all for now, and I'll see you next week.